Welcome to the Brokers Podcast, the place where we give commercial real estate investors insight into the New Jersey industrial real estate market. I'm Scott Perkins.
And I'm Chris Todd. We're going to show you the world of industrial real estate in New Jersey, the movers and shakers of the industry, the trends, the prices, the next big thing, all the stuff you can't get anywhere else so you can confidently invest in the market.
So here we go. Well, Chris, this is our first podcast. We have been doing videos quarterly, but there's a lot of information that has been coming out in between all of our videos. And we thought it would be a good idea to put it out on a podcast so we can get it out quicker.
Yeah. When you do videos and content every quarter, every 3 months, there's about a month or two of information that is stale by the time the next video comes out. And I think there's a lot of information to talk about. So we want to introduce the pod as well to kind of supplement us talking to you guys in the market, and which we can dive in a little deeper with a little more information.
Right, and we can put it out a lot faster and maybe in smaller bites and get more information out on what's going on in the market.
Yeah, they won't get to see Kerry, but they also won't have to look at our faces, so I think it's a little bit of a trade-off.
There's always a bonus, right?
And so for this first podcast, we did want to talk about some of the sublease space that is coming on the market, both on the iOS space, which I think is getting a lot of the headlines, as well as some of the box space. We ran a search requirement for a requirement we have in the Meadowlands, 25 to 50,000 square feet. When we took out, what's not available, cleaning up CoStar and some of the brokers that don't update it, that I won't name names
There's some
on.
of those? Oh, interesting.
I think people listening might know who I'm referring to. There's 23 available spaces, 9 of which being sublease spaces.
So sublease space is a little concerning, at least to a lot of our institutional investors, wondering what is that going to do to the market?
Yeah, and it's almost impossible to predict because of each individual sublease has its own, has its own lease language.
There's terms.
There's terms.
Is there a renewal? You don't know
Sure.
if there's a renewal. So it doesn't look like just what regular space, new space out on the market. It's different.
Of course, yeah, absolutely. And that's 40% of our search. And we do have investors saying, is this going to cannibalize the leasing market? If there's 9 spaces at $15, why would someone sign a new lease at 18?
Right. So there's an effect also on renewals because a lot of the renewals recently, there was nowhere to go. So maybe now there's some places to go, which didn't exist before. So you have to be cognizant of that and make sure that we're pricing correctly for the market that we're in.
Sure. But you do only, each sublease and each assignment is completely different than another. And it's hard to make generalizations, which is, I think, why people are freaking out, but also could mean that nothing happens. And so it'll be interesting to see, and going forward, does this sublease space get eaten up? Do tenants sidestep that sublease space because they want, clarity on terms, on renewal options?
Or work. You might not get that much work on a sublease.
Sure.
You might just get it as is. So, that's one of the downsides. But it's also at a lower rate, theoretically.
Yeah. But if you have to, move twice in 4 years because there's 3 years of sublease term, and you have your disruption of business, you have your employees moving twice, how much money are you really saving?
Well, that's true. So let's talk about rate. What do you think in the Meadowlands, if you were to have 20 to 50,000 square feet and it's space that's coming onto the market that's not sublease space, what dollar figure are we're seeing?
Yeah, we're talking Class B?
Yeah, Class B. That's most of the Meadowlands.
Yeah, and it's funny. We were flirting with $20 for quite some time, and everyone thought we would break it, and we kind of just haven't. And now with the increase in interest rates again, which based on some of the information you can tell when this pod is recorded, based on rising interest rates, it could have been any time over the past year. It seems like we're still in that 19 range, maybe high 19s. If it has some attributes that are really special, with whether it be parking or loading, maybe you are breaking 20. But for Class B, it's probably just a touch under 20.
Well, we've seen some sublease space out there, which the lease had a recapture clause, and it was at a much lower rate. So there was no reason why a tenant would put it on the market for 19 when they were paying, say, 12. They just want to get rid of it. So that's always out there too.
Yeah. And so I think that's what we're going to try to find out is, are new leases going to start coming down to meet the subleases, or are people going to dig their heels in and hold firm and say, if you know, are willing to deal with what comes with the sublease, then go take the cheaper space. And, you know, there is a touch more vacancy now, where it'll be interesting to see how some of these people that maybe have some spaces that have been sitting, how they deal with it.
Right, so you might see a little more flexibility in a lease rate than you did 6, 8, 9 months ago.
Yeah.
Just to make sure you don't get eaten up by the sublease.
Yeah, and I mean, while this is going on, though, we're still clipping renewals at a very high rate, and I do think, you know, you offer the tenant a renewal offer, they always roll their eyes. They think it's way too high.
And they go out to the market.
They go out to the market, and maybe there's a little bit of cheaper space out there. Usually, because the market's become so institutionalized, you know, most of the people, there's clarity. People are asking the same amount. And if you come out at that rate, we've seen a lot of tenants do the cost of moving in their head. And all of a sudden they come back and they end up renewing. And I think we are seeing quite a bit of renewals at not a discount,
Right.
still at market. It's just, you know, the new deals being done have been a touch slow.
Well, it's gonna look a little different for the next few months. So it's just a matter of what effect this really has on the market. Will the Meadowlands push above 20 on Class B space? Probably not now because of the sublease space currently.
Yeah.
But let's talk about some of the new space that's coming on the market. There is some.
Yep.
And where are we rental-wise for new space? You know, it's not very large, right? It's
From a Class A.
Class A space.
Class A, I know, you know, you still have Harts, Teterboro, big chunk of square footage there.
Yeah, 515.
515, and they're at 30, if not right under 30.
Mm-hmm.
You know, you have Morty Lipkiss and the guys at 200 Murray Hill. Not a name I thought I'd be shouting out at this podcast, but not a developer by nature, but owns a site and is going to develop that building.
But he's looking for those too, those mid-20s, high 20s.
Oh, he's looking. I think he might be thinking he's going to get low 30s, and I don't know
Low 30s.
what broker listening here has been talking to him, but
Well, I don't know if there's comps yet for that, but
not a ton. Especially, you know, it's not a bad site plan by any means. It's not a site plan that has acres and acres of trailer parking, which is not atypical for the Meadowlands, but you know, I just don't know if we're quite there at 32, 33 yet.
All right. Well, you know, it hasn't come out of the ground yet, so we
No.
haven't demoed the existing building. So who knows what the rental rates will be in the future?
Yeah, but there is still not a ton of new construction, and if a tenant does need new construction, it needs to be right there. We've seen tenants pay up for needing to be right there, and we've seen it more around the airport
Yeah.
and the port, but they're paying a lot because they need to be right there. It's definitely a tier 1 location where people would need to be there, and it just takes one tenant. So it'll be interesting to see with these new buildings who takes it, what it looks like.
Right.
Because they're not going to sit forever. It's just it's too good a location. The rest of the product is inferior. All the metrics are there for it to eventually get done, and it'll be interesting to see what some of those get done at.
Well, that's what allowed him to say, I'm going to demolish a building which is functional for the Meadowlands and build a new one.
Yeah.
The rental rates, well, could be there.
Yeah, he probably could have kept it and been in the high teens, doing nothing and scraping it, building new. But you know, if he wants to hold on to it for generations, build new, and in theory that should work.
Okay. Well, we'll see how that goes.
We could touch on iOS.
Yeah, let's do
I know we have a whole our next video is going to be fully iOS, ISF parking. While we're talking about sublease rents and sublease space,
Let's just do that piece, and then we'll
Yeah.
save the rest for the video.
we'll save the rest of the video, but you do have Blauenberg now out with the 228 North, the Torino site that Shipco took, and they have it out on the market for sublease for the entirety of the site and the entirety of the term, and that was the high watermark comp in the ISF space at 48,000 an acre a month.
Big numbers.
Big numbers, and they never took it. And then you have Sarcona, who took the 35 acres on Delancey which was a very big chunk of space and a big number at 40,000 an acre month. And right now, the entirety of that space is on the market for sublease as well. And I know, port volume's down, TEUs are down, and a lot of the math that made sense when there was a ton of product coming in, maybe doesn't make sense right now with the port volume being what it is.
Well, there it is again. The sublease is the story of the day,
Yeah.
whether it's in iOS or in buildings.
Yeah, and there are still tenants out there and leases are getting done, but it's interesting to see what the sublease space will do for all of us. So, we just kind of want to pose the question here on this first one, and in a month or so, when we do our next podcast, maybe there will be some answers.
Okay, well, that sounds good. But there's a lot to go over, and for our first podcast, we're done with the sublease space for now. I'm sure it'll pop up over the next few months.
It'll all be gone.
Well, you're always the optimist,
Yeah.
so throw that out there. It'll be gone by the time we're videotaping.
Yep.
Okay, well, I think that's all we got for today.
Yeah, we just want to kind of ease you guys into it, get a feel for it, and we look forward to kind of hearing from you guys, the audience, on how you like it.
All right, see you soon.
See you soon, guys. That's all we've got for this episode of The Brokers. If you liked what you heard, don't forget to like, comment, and subscribe on iTunes, Spotify, or wherever you listen to your podcasts.
Also, make sure to link up with us on YouTube at Perkins Todd The Brokers and on Twitter at The Brokers NJ. Until next time, we'll see you then.